जिंदगी के कई मौसम अनुभव किया मैंने। हालात बदले, लोग बदले, अगर कुछ नहीं बदला तो बाबूजी की सिखाई हुई एक बात, वो कहते थे जब नींव मजबूत हो तो फिर चाहे वक्त के उतार चढ़ाव कैसे भी हो, हम उनका डट कर सामना करने में सक्षम होंगे। बिल्कुल इस पेड़ की तरह ऐसा ही एक अटूट रिश्ता जोड़ता है आपके साथ IDFC फर्स्ट बैंक। विश्वास, पारदर्शिता और सच्चाई का, क्योंकि इनको आपकी सफलता में अपनी जीत दिखती। मैं तो जुड़ चुका हूं इनके साथ, आप भी जुड़ जाइए ना। IDFC First Bank, always you first.
Welcome, ladies and gentlemen, to Outlook Business Leading Edge 2021, presented to you by IDFC First Bank. The topic for today's discussion is fixing India's job crisis. I have with me two very authoritative voices to speak on the subject: Ajit, founder of Quess Corp, and Manish Sabharwal from TeamLease Services. Quess Corp is India's largest private sector employer with more than 384,000 employees. It's the world's fourth largest business services company by headcount and 12th largest private sector employer globally. TeamLease is one of India's leading human resource companies, offering a range of solutions to 3,500 employers. The company presently has about 200,000 associates spread across the country. Thank you, gentlemen, for joining me on this discussion today. My first question to you is, between the same time last year to now, that is pre-pandemic to now, how has the job scene really changed across sectors in India?
Sure. So, if you look at the problem definition really in India, I think one has been the loss of jobs itself because of the pandemic. Second one is an inability of job seekers to find these jobs where they exist. And the third one is income disparities and inequality of incomes that have sort of got accentuated a bit in this whole process. And the sectors where you'll find it's been impacted most, definitely tourism. Tourism contributes maybe about 10% of the economy and a little less than that in terms of workforce participation. One. And second one is the food and beverage sector, where definitely there's been a huge impact along with the entertainment and retail. So wherever there's human contact and touch is where there's been a maximum impact. And I think where it will take a little bit longer to get back to shape.
Sure. Overall, in terms of numbers, Ajit, can you sort of lay down in terms of what were, is there a number that you can attach to what it was last year versus what it might have been?
So that is, you have to triangulate also migrant population in this.
Right.
It's estimated that there are about 120 million people who are migrants. And estimates vary between 40 million to 60 million as to number of people who could have lost jobs in this process. A number of them have come back to their places of work. And that's the number that we're dealing with.
Okay. Manish, you want to add to that in terms of how the scene has really changed between last year and this year?
Well, I mean, if you measure unemployment, it hasn't changed, right? I mean, we were somewhere between unemployment in India is a meaningless number, but it has stayed between 6 and 9% since independence. Yes, the stupidity of April, where CMI said 29% unemployment in April, but on Sunday afternoon, unemployment is 70%. Your office is closed down. I mean, you can't go to office on Sunday, so you couldn't go to the office in a lockdown. So unemployment was where it is. But at least all official, unofficial, and all studies suggest that unemployment is back to 6 and 9, somewhere between 6 and 9. I think right now it's at 6.8. So I think that this jobs may be the wrong lens to look at it, right? India doesn't have a jobs problem. Otherwise, if we had 6% unemployment, why would we have 30% poverty?
Right.
So the problem is employed poverty. The problem is productivity, right? People have jobs, but they don't have enough money to pull out of poverty or keep hand and mouth together. I mean, 42% of our labor force in agriculture only generates 14% of GDP. So I think that framing the question often as jobs in India, misses the point that unemployment has, I mean, most Western countries would kill for our levels of unemployment, but that doesn't mean much for, prosperity, right? So it's sort of a broader point about, India's 5th in the world in GDP, but 138th in the world in per capita GDP. So which one is more important? I think COVID just reminded us that per capita GDP matters more than GDP. And so we have a lot of jobs, but most of those jobs don't provide a living wage. They may provide a minimum wage, but the two shock absorbers of India's labor market, self-employment and farm employment, essentially have an infinite capacity to absorb people, but they have very limited capacity to pull them out of poverty.
So that in the industrial sector, I mean, now, since you brought this, I was about to bring this point a little later in the discussion, but since you have already brought it, is our current economic policy, I mean, now you look at farm policy or, what we are doing with respect to PLI and the kind of sectors that we are picking up there. All of these are measures that take you down a certain road. For example, what happened, we probably prioritized employment. That is why we wanted to give all these subvention schemes and support the textile sector. We are doing exactly the same thing with chemicals and pharmaceuticals, applications, etc. All the places where China is vacating, we want to take those sectors, which probably are a lot more labor intensive, but not really sectors of the future. So similarly in farm, you're saying, the problem really is that you're employing a lot of people, but you're not able to ensure productivity. The new farm laws will take down that path, but that doesn't still, will that not pave the way for greater inequity rather than fixing the problem?
The only way to help farmers is to have less of them. I don't think anybody has any other solutions. I mean, we're already at the limits of fiscal and monetary policy for many things. We can talk about it. RBI's balance sheet is up by 14 lakh crores in the last 12 months. The central government budget is 34 lakh crores, of which we're borrowing 12 lakh crores. So my sense is that when you say that it'll raise inequity, you're comparing it to what? I mean, you're comparing it to today, where 42% of the labor force generates 14% of the GDP. I don't think anything can be more inequitous than that. So I would submit that there are 5 labor market transitions that any country tries to make: farm to non-farm, rural to urban, subsistence self-employment to wage employment, informal to formal enterprises, and school to work. And the one in India since 1991, which has not worked, everything else has made progress. I can cover that, but the farm to non-farm transition hasn't happened. And China's genius was moving 200 million people off farms. Now, China's farm to non-farm transition happened to factories. Ours is happening to sales, customer service, and logistics. Should have happened to construction a little bit, but didn't happen. But that's not an option India has, right? In 1978, when Deng started reform, he was very skilled, Deng Xiaoping, but he was also very lucky in China. He caught a 30-year super cycle of global growth, global openness to trade, and global deconstruction of supply chains. So I don't think India should give up on manufacturing. The peak of any country's labor force in manufacturing was Britain in World War II. It was 45%. China peaked at 33, America peaked at 28. I don't think we'll ever get to 45, 33, or 28, but 11% of our labor force in manufacturing is the wrong number. So we will get to somewhere between 17 and 18% of our labor force with current models. And Make in India might just be Make for India, right? If you look at the $64 billion in FDI last year, most of it is concentrated in areas where domestic consumption is getting to critical mass. So I think we'll get from 11% to 17, 18% in our labor force in manufacturing, but obviously India is turning out to, we thought India would grow up to be like China, which was 55, 60% of our GDP would be trade. But maybe we'll be like America, where only 25% of GDP is trade, and yet it's a prosperous country, right? So I think that the export-driven model of manufacturing was a model which Southeast Asia and China did exploit. Maybe manufacturing is less labor intensive than it used to be. Manufacturing is much more affected by automation than service businesses. So I think that we have to be careful in sort of copying China. I think we all are jealous of China, but we should have been jealous. We copied it 30 years ago rather than thinking about copying it today. So I think that if we improve the productivity of our regions, of our firms, and of our individuals, we can deliver prosperity for the population. That's what we're finally trying to do, right? Raise per capita GDP. So I think The productivity of regions is what has been, I mean, I live in Karnataka, my parents live in Uttar Pradesh. Both the states have the same GDP, but in Karnataka, we have 1/4 the number of people, which means we're 4 times more productive than people in UP, right? Or if you take firms, the 63 million enterprises only translate to 22,500 companies with a paid up capital of more than 10 crores. And there's a 22 times difference in productivity. And obviously in individuals, we know the difference. So I would say India's way forward is raise the productivity of our regions, of our firms, and of our individuals. But
sure.
Ajit can add.
Back, Ajit, are we, in terms of policy, are we really geared to make this transition from, to better per capita income, which is essentially enhanced productivity and more jobs?
So there is a couple of more dimensions to the question that you're asking. For one, if you look at a comparison with China as an indicator, our per capita wages, I mean, our minimum wages is actually almost about half of what China is right now. It's about almost $0.8 versus
right.
$1. So our minimum wages has got to go up a bit. The second point is that private investment as a percentage of our GDP has come down. Previously in 2012-13, it was closer to about 40%. Today it's about 28%. And there's a lag time between investment and what shows up in terms of jobs, in terms of outputs, and in terms of also productivity increases that will come through technology infusion that will happen through the investment that's coming in. So private investment has to go up. And the third thing is that government investment also has got to change. If let's say roads is an indicator of things, we're presently doing between 23 and 25 kilometers of roads. Target is to go to about 40 kilometers of roads. And I think if we can even get to about 30 to 35, we're going to see a lot of increase in the sectors below roads, for example, cement, steel, and the supplier sectors. So I think a combination of these things plus a focus on MSME. MSME today contributes about 30% of our GDP and about 50% of all our exports. 80 million people work in the MSME sector. And a lot of them are also from farm origin, in the sense they come from the non-farm. I mean, when there's a farm to non-farm transition that takes place, a lot of them come through the MSME route. So there's a lot of people in the migratory system that's coming through the MSME route. So we have to look at all of these aspects to see how we can increase productivity. I think by skilling alone, it's not going to go up, but a combination of many of these factors.
Tell me, Manish, that I'm coming back to this question again. I mean, enhancing productivity, for example, SMEs, like you rightly said, is a large employer. Again, the productivity standards are really low. I mean, many of these companies wouldn't exist if you just evaluate them in terms of whether they can be competitive, stand by themselves, but it's just that they can't find employment, and therefore everybody finds that, okay, you can have a small outfit and keep all kind of costs low. The promoters won't take salaries, they pay less than what they ought to pay people, and still those businesses keep going. Now, the moment you say that, okay, we are going to chase productivity standards, which are we are going to look at everything from a competitiveness perspective, you will take a toll on jobs. Where are those, how are we going to bridge those vacant places that will emerge because you will enhance productivity across all these pockets?
I mean, there are two ways to think about the world. One is that you can predict the future, and the other way is you can make yourself worthy about the future, right? So I think I have read 50 reports of different countries in the world: US, UK, Japan, China, US in 1920, US in 1980, Japan in 2020. Where will the jobs be? All of them have the efficacy of palm reading or astrology, right? 50% of the jobs created in the US in every decade from the 1960s did not exist in the decade before that. So I think that the role of the government is not to set things on fire. It is to create the conditions for spontaneous combustion. Make India a fertile habitat for business, improve ease of doing business, improve land labor markets, or what economists call TFP, total factor productivity, or the solo residual, and how land, labor, and capital combine. India has been a hostile habitat for entrepreneurship for decades, right? In the 1955 Avadi Resolution and the 1956 Second Five-Year Plan essentially meant that our labor is handicapped without capital, and our capital is handicapped without labor. We have 63 million enterprises with lots of labor and no capital, and we have 22,500 companies with lots of capital and no labor. So I think that what has changed in the last 10 years? Actually, Bhukananga Pyasa is not there anymore. People are not dying of hunger and poverty like they were in the 60s, right? What has changed is the aspirations of people. And young kids are no longer willing to self-exploit. So there was a Russian economist called Chainov in the 1920s. He convinced Nehru that small farms are viable because you don't have to pay yourself a salary, your kids a salary, your spouse a salary, and you don't have to charge rent. And he called it the theory of self-exploitation. Most Kirana stores in India are sort of self-exploiting, right? So the reality is that India doesn't need 63 million enterprises. The US economy is 8 times our size and it only has 24 million enterprises. So I think an inevitable consequence of this transition or of GST or of many other things that are being pushed through the policy window that we have developed both pre-COVID and post-COVID, whether it is labor reform, education reform, agriculture reform, is a decline in the number of MSMEs. But 63 million, 6.3 crore enterprises is just way too many enterprises. Not everybody can be an entrepreneur and not all entrepreneurship is viable.
No, that I think is taken, but how do you, the point is, how do you tackle this displacement? You know, while we all place our faith in the markets and that's the system that we all believe has succeeded and therefore we want to go down that path, in the end, there has to be some level of state intervention to see that it's just, it functions properly and it works for everybody, right? So
why unemployment has not exploded? Why isn't it working? I mean, otherwise we should have 25% unemployment or 20% or 15, right? We have 6.3% unemployment. Now, if you're going to push back and
industrious Indians that they, you know, even if they don't have employment, they will find themselves some employment which earns them their bread.
But that's true of every country in the world. That's true of every country in the world, right? So I think that when you say stuff like the state should take its role, I mean, that was the 1955 Avadi Resolution. That was the 1950.
That's not what I'm saying. I'm saying, like, for example, China had a proper plan 20 years ago or maybe more than that ago to say that, okay, we are going to be the factory of the world. And that's the way to create large employment for people. The game, as you rightly pointed out, has moved from there. Now, as you see over the last 5 years, although we are saying we are taking a slice out of China, the point is they want to move forward. They are into smart manufacturing, AI is moving their bulk and API drugs into more and more innovations and IP and so on and so forth, right? So my question is exactly this. While it's one thing to say that we are a populous country, we can create great level of, we have large scale in terms of consumption that is possible in this country, and then we can make in India for India. But isn't it in a sort of a vicious circle that you have to first lift people and then start relying on consumption? And for doing that first lift, you need a strong, large way to create employment.
I think there is a definite case for some sort of government intervention, so to say, in the way things are today. You look at the United States just after the Great Depression that was there. You know, it was, I think, in around 1929. Just after that, Franklin Roosevelt came to power, and then he had the New Deal. He had the 3 R's in that: relief, recovery, reform. There was a concerted set of actions that took place in agriculture, in the banking financial system, and in terms of creating jobs. And what they had then was a terrific recovery. You know, GDP went up 13% in 1 year's time, or by 1936, actually, in about 3 years' time. Unemployment, went down from 25% to about 14%. About 25,000 banks had failed, and then it came down to maybe about 9 banks in 1 year. So I think there's a case today for a government to act in a few areas. And we have MSMEs that are such a dominant part of our economy, so we can't ignore them. There has to be something that's done about them, or wait for the cycle of change and wait for time to influence some of the changes that will also take place. It cannot happen overnight. So definitely a case exists for government to accelerate investment plans to ensure that there's downstream employment that happens through that process. That they also work towards financial inclusion and the movement of labor from informal to the formal workforce, and that automatically will ensure that social benefits become available to a larger section of the workforce. And lastly, it will also ensure there's more predictable incomes, because there are contracts, there are ways by which one can predict somebody's salaries, and I think there'll be more financial inclusion that will happen as a part of that. So we think that the government is making a lot of movement in all of these areas. I think we're hearing the right noises. The last budget introduced by the government was a steady state budget. It kind of prodded things in the right direction. And I think the new labor codes that's coming in also is going to help move people from the informal to the formal sector. So I think all of these things together is going to help us progressively come out of the problem. Because of a low base effect, I think the next year we could see growth of about 10 to 11%. But unless India grows between, let's say, 6 to 9% in a year consistently for the next, let's say, 5 or 6 years, our China-like success is difficult to repeat.
Sure. Manish, would you anticipate a scenario for India to have a jobless growth over the next few years? Especially as, if you focus on competitiveness, if we focus on market to find its own solutions, then is that a real and present danger? Would you look at it as a danger at all?
No, have we had jobless growth for the last 50 years? Or we've had growthless jobs? Or which one have we had? Have we had growthless jobs or jobless growth? I mean, unemployment has stayed between 6 and 9%. So you have to be careful with these statistics, because unemployment is not a fudge number. It has stayed between 6 and 9, but poverty is obviously 30, 40%, whatever your view is. So I keep coming back to that this whole concept of jobless growth is meaningless in a country like India, because they will always end up, and you can't have multiple definitions of employment. You can have multiple definitions of poverty. Right? A minimum wage is an arithmetical concept. A living wage is a philosophical concept. My kids have a much higher definition of living wage than I do, and I have a much higher definition of living wage than my parents did. So I think this whole concept of what was a need for my parents and or want and desire is all philosophical. I mean, finally we have to talk about absolute poverty in a country with the scale and size of India, and we have brought it down, and we have to take our per capita income to $10,000, $15,000. So I'm not worried about jobless growth, if that's your question. I think that yes, technology is oppressively automating manufacturing, but there's a lot more jobs coming in everything else.
So this just a related question I had with respect to the way the global economies are moving, in the sense that over the last 1 year, especially, you've seen that interest rates have gone down extremely sharply, right? And every time the world faces a crisis, interest rates go down lower and lower. And obviously, because governments also have a great interest in keeping those interest rates low so that their deficits are serviced, their borrowings are, cheaper to service and so on. Now, does this create a great imbalance in terms of, creating jobs? Because labor and capital are the two factors of production. You make one artificial, I don't know if I should say artificially, but I would think it's artificially cheap, and it's what the governments are driving. And that greatly disincentivizes companies to be preferring one over the other. So this whole economics itself seems to be pushing towards lesser jobs, in my mind.
So was Thomas Piketty wrong that capital is a problem? Because in a world where fixed income becomes no income, all this crap about inequality doesn't work, right? Inequality was built on the assumption that capital returns will outstrip labor returns. 62% of the world's bonds as of this morning trade at less than 1%, 30% trade at negative interest rate. So modern finance doesn't work with with negative interest rates for sure. I don't think it even works with 60% of the bonds, right? How will university endowments run? How will pension funds be ever paid and stuff like that? So I think I completely disagree with, I don't think that debt does not matter anymore. I think that stealing from your grandchildren is a form of narcissism. I think that there are situations today because of the US's reserve currency and Japan's declining population by which those two countries are able to support the amount of debt they have laid on. But the US's fiscal deficit this year is more than our GDP. And they can only do that because they are the world's reserve currency. So no, I don't. I think that the interventions by central banks are central banks are run by technocrats. They're not run by elected people, but they are wading into political decisions. And politics should be the realm of people who are elected, because central bank quantitative easing may not have led to inflation, but it is leading to asset inflation. And I think we have to update our framework for central banks to include asset inflation in their models. And most central bankers would agree that a large part of the quantitative easing that they put in the system did not go to the real economy, it went to financial assets. And so there is an interesting paper last week on whether central banks are responsible for increasing global inequality. And I'm maybe because of asset inflation, because of stock markets, and because of only 20% of the US owns stock markets, only 5% of India owns any stocks. So you could make a case that quantitative easing has led to increased income inequality or wealth inequality. But we're in uncharted territory. I think that COVID particularly required a fiscal and monetary response. I think India has managed it well. In terms of spending enough but not going overboard. I mean, anyway, a country like India can't go overboard with our current account deficit, with our export-import sort of ratios. So you would put the currency at risk. We can't behave like the US and Japan are doing. So right. I don't think the current framework is biased against labor, if that's what you're saying, or does it retard job creation at a certain level, lower cost of capital, at least, while some of the traditional notions of trade-offs between unemployment and inflation are being tested or are not working in today's environment. But I think the correlation between lower interest rates, higher investments, and consequently higher job creation will kick in as soon as COVID is done.
Sure. Ajit, your thoughts?
So I think definitely there's a case in India for a greater job creation that's going to take place in the future. As we look at things that's unfolding, manufacturing is going to pick up in India, and we're seeing the signs from Quess already, where there's greater demand for jobs in the manufacturing sector. There's greater capacity being created. Consumption levels are predicted to go up in India to feed both local demand that's going to surface, as well as for export. I think manufacturing sector is going to go up. Healthcare is going to be another area where, as coverage goes up, as government schemes come into play, and as private sector also increases its investments in healthcare, it's one of the areas where we're going to see a lot more people coming in. As quality of life changes because of higher income levels, entertainment, restaurants, tourism, and of course, e-commerce itself is going to go up. E-commerce today, is about 16% of the share. So I think, e-commerce is going to contribute significantly to creating more employment. All of these, while we will have difficulties in terms of the older jobs and some of the, some of the more jobs that lend itself to automation more easily going away, there will be new segments that open up. There'll be more geography that's going to show some, economic development. And I think we're going to see more jobs in India. And along with this, the movement from the informal to the formal sector will also be there. So I think we're going to see a number of more jobs on the board. But one of the problems that India has is also our statistics, the way we capture the number of jobs. I mean, if you look at EPFO statistics, for example, it doesn't really mirror our job situation on the ground sometimes. So we are unable to get job statistics. And that's also another reason why the panelist Manish was talking about growthless jobs or jobless growth. So we're not able to capture the where these jobs are coming from and how much it's going to contribute to the economy very easily. But from indicators that we see, currently if you look at high frequency indicators, GST, e-way bills, sale of two-wheelers and tractors, power, fuel consumption, etc. All of them are looking north. So all of them cannot be looking north and not be creating jobs. So I think there is an indicate that there is enough proof on the ground or secondary level data to suggest that there is job creation that's coming our way.
Manish, what what are the trends that you're seeing in terms of how jobs are getting created across various sectors? Has a trend emerged post-corona in terms of where specifically the growth momentum has picked up?
I mean, it's picked up, it's a bipolar sort of recovery, right? In technology, it's picked up quite a bit because it's obviously the addressable market for Indian IT services companies has gone up substantially because of Corona, right? Digitization has brought 2030 to 2020. And so I think that there's no such thing as a technology company anymore. Every company is a technology company. So I think the 4.5 million IT employment will go to 10 million, but that doesn't move the needle on the labor force, so 550 million. So essentially, sales, customer service, and logistics seems to be the first area of recovery. Now, e-commerce has recovered, or sales has recovered, or customer, but sales, customer, logistics were anyway the fastest growing segment of the labor market for the last few years. So that is just being reinforced by Corona, where domestic consumption is broadening, it's deepening. FMCG, FMCD, that seems to be the place where most of the recovery is happening in the first phase. I think there are some professions which can't be done with social distancing, but obviously those have been compensated by other areas at the bottom of the pyramid.
Sure. In terms of wage inflation, I mean, we're told that, Ajit also mentioned earlier in the discussion that China labor rates are twice. In fact, one of the guys was telling me in setting up, the capital cost of setting up a chemical plant in India is as much as 30% higher, primarily because higher in China, primarily because it's very the project itself is labor intensive and the labor costs are 3 times as much as India. And now US is also talking about there is at least talk about raising minimum wages to $15 and so on. So what do you think should be the way forward for India? Is there a case for those numbers to be revisited, minimum wages numbers to be revisited in India?
I mean, the objective of reforms is to raise wages, right? I mean, we're not trying to keep India poor forever, right? I mean, China is an interesting place because it has raised its minimum wage 35 times in the last 30 years. That's why it's a better place for the average Chinese, right? If you were born poor, I don't think I would want to live in China, but if you were going to be born poor, you'd possibly want to live in China than in India. So I think that raising wages is an inevitable consequence, but it's also an inevitable goal of reforms. Now, if the wages go up without productivity, like happened between 2004 and 2014, then you will end up with inflation. And macroeconomic stability is the biggest curse on the poor, and it's the biggest bludgeon on job creation. So I think that people underestimate how important macroeconomic stability is to investment cycles. And so if you raise your wages ahead of productivity, you will end up with inflation. I mean, if fiscal deficits could make countries rich, then no country would be poor, right? I mean, that's just why would anybody be stupid enough to be poor if all you had to do was spend more money than you have? So I would submit that India's wages will go up as the productivity of land, labor, capital improve, as how they combine, which is total factor productivity goes up. But we should let wages go up by higher productivity, not by some Ayatollah issuing fatwas about what minimum wages are or something like that. I think that the minimum wages are already approaching the point. In some states, they've gone too far, I think, but in most states, they are now approaching the point where they reflect market wages, and they will probably go up a little more sooner rather than later.
Sure. Your thoughts, Ajit?
I think it's a good fatwa to have minimum wages go up, contrarily, because I think what's happened to India is also in the last 12 months, ever since COVID came, most companies have tightened their belts, taken off expenditures which are non-core, so to say, and have greater productivity in the system. So there's a systems thinking to productivity now. And I think the operational anemia that was there formerly has been taken away. Now is the right time to actually increase wages a bit, and that will further on increase productivity because people are now conscious of this as a subject, as an area to focus on, and management is spending a lot of time to getting this done. And I think when minimum wages go up, the demand on productivity will go up. There will be an automatic increase on labor to change the ways they work. It will have effect on consumption. It will have an effect on disposable savings. It will have a further effect on domestic production itself. So with more people coming into the formal sector of employment, the combination of greater minimum wages and more people in the sector, I think will have a very good effect on an Indian economy. So I think I'm on the other side to say that it's a positive fatwa to have.
Yeah, it's just our ability to enforce it. I mean, I think that you overestimate the capacity of the Indian state. And if you want more people in the formal sector, then you have to reduce regulatory cholesterol rather than raise it. I mean, trying to raise wages by raising minimum wages is trying to treat obesity by mandating small sizes. I mean, there's enough research to suggest that no company will be able to hold back in the formal sector. But if you raise it too far, it only hurts the young and the less skilled people. So, I mean, we can debate that, but there's quite a lot of literature to suggest that minimum wage setting is like interest rate setting in an economy. I mean, you have to get it right. Too much is a problem, too little is a problem, and there's a Goldilocks sort of not too hot, not too cold spot, which is, I think policy making in India will have to learn. I think it'll have to be more decentralized. You can't have that set in Delhi. You need to have it set in state capitals. Some people would argue you need to have it set city-wise. So I think I would be careful with prescribing minimum wages as across the board hike on the national minimum wage as a solution to COVID. But economics is not as precise as physical sciences, so I'm okay to.
More so also with respect to at a time when you're trying to do all this make in India and stuff like that, there is a great disincentive for the government to be pushing for higher minimum wages. I mean,
I don't think that's true at all. I think governments have to fight elections. I think a modern state is a welfare state. I have no problem with social security in this country being funded by higher growth rates. Scandinavian countries, Norway, Finland, and Sweden have the highest ratio of tax to GDP ratio. They have among the highest minimum wages in the world, but they are 4, 5, and 7 in the ease of doing business rankings. So their massive social security nets are funded with fundamentally free economies, which pay taxes, which you use for redistribution. So I think we have to get out of this zero-sum game view of the world that the government is somehow going to increase employment by keeping India's minimum wages low. You need to give us. We don't need subsidies, we need freedom. We need the freedom.
Sorry, yeah.
No, I'm just saying, I mean, it's patronizing to believe that Indian entrepreneurs or Indian labor or Indian companies will not be able to compete. If the ease of doing business, if the infrastructure, if the financial markets and everything that is the area to focus on. And my sense is this, tinkering around with minimum wages is a wealthy and rich country phenomena, and even there it is suspect as a policy instrument to improve welfare. I think nothing improves welfare like a job, and a formal job is even more important, and that formal job depends on the productivity of its firms and the individuals.
Well, changing minimum wages is not, let's say, the number one priority on the list of things I think which the government should attend to. I think the number one thing is ease of doing business. And that's, I think, the most difficult aspect in India still today, even though we've climbed a few notches on the list. I think we're still far behind where we should be. It still is difficult to get approvals done for your business, for your tax refunds to come through. Your access to credit is also difficult from banks. So all of this combined, makes doing business in India not the easiest thing. So while raising wages at a labor level is one of the options that's good to have, it's not perhaps the number one thing that's that needs focus today. It's clearly ease of doing business that needs attention.
One of you made this point that private sector investments as a proportion of GDP has really gone down, which is true. And this year, because of that, probably the government has stepped up infrastructure spending. So when do you think private sector investments really will pick up? Do you see it coming back anytime soon? And that leading to job creation?
I mean, the government capex budget is 5 lakh crores. I mean, and a GDP with 200 lakh crores, I don't think government investment it's just a catalyst to setting off private sector investment. So I think we have to give up on fiscal and monetary policy as the way to fix India. I know you keep coming back to that. I don't think fiscal and monetary policy can fix India. Only structural reform can fix India. So Ajit may have other views. I think we are at the limits of fiscal and monetary policy. I think if you set entrepreneurs free, if you fix ease of doing business, if you let credit to GDP ratio go from 50 to 100%, if you let 52 cities with more than 1 million people compared to China's 375. We need 200 cities with more than 1 million people. I think structural reform is the only way. 30 years ago when we started reform, I know we all love to sing the praises of 1991, but China and India had the same GDP in 1991 per capita. So I think they're 4 times more than us, means we need to renew our ideas about what leads to growth. And I think I would place productivity at the heart of what leads to growth. Fiscal and monetary policy is at best a fringe player in making India less poor.
Sure. So in the absence of that happening, I mean, do you see that happening? Let me not be preemptive in this. Do you see that happening over the next 1 to 3 years?
Absolutely. I think the next 25 years in India will be completely different.
I would have asked this in 2014 and you would have said yes. I would have asked you 3 years back, would you have said yes?
And I was right all 4 times. If you were a stock market investor, or you were a poor person, or you were a rich person, foreigners have always been more optimistic about it.
Entirely, as much as you would say stock markets are entirely a creation of monetary policy. I mean, you couldn't dispute that.
I think, foreigners have always been more optimistic about India than Indians, and they have been right. I think that the 25-year cycle of either domestic consumption or foreign investment, either FDI or FII or job creation, I think what you've seen in the last 25 years in India is nothing compared to what you will see in the next 25, primarily because reforms have now compounded. We are so far from the productivity frontier that we have even forgotten that almost 40% of our labor force just lies, sitting, it's not doing anything. And this is really low-hanging fruit. This is not institutional capacity. This is not civil service reform. This is just, low-hanging fruit, flick of pen reforms. And I think after 30 years, we're getting to the point, and COVID has sort of provided us with a hearing aid, if you want to call it, about how we are a poor country. I was interested to see people outraged about migrants, but Social Security is a luxury good. I mean, it's not earned, it's not inherited. You have to earn it. Social Security as a country, the right to do Social Security. So I think that if I was a young kid and I had one country in the world to move, that would be India for the next 25 years, because of our past sins. We are of such a low base. I'm not saying we are the only country in the world with more than 100 million people that has 25 years of growth ahead of it. And so even if we don't get everything right, and we haven't got everything right either in the last 5, 10 or 20 years, I think that in a world where capital is a commodity, capitalism without capital is becoming a reality, which is completely contrary to what everything Karl Marx and Thomas Piketty said. They did not imagine capitalism without capital, but the fixed assets of Google are 1/1000th of its market cap. So I think intangible assets, capitalism without capital is really India's structural opportunity. There's a new world of work, there's a new world of organizations, there's a new world of education. Capital is a glut, fixed income. So being lucky is more important than being skilled in life. As you get older, you realize that. And I think India is really lucky in the next 10 years. And obviously, if we add a bit of skill to this mix, then it would be fantastic.
Sure. Ajit, your final comments on...
I think the best of India is yet to be seen, and we are coming up to see what's perhaps the best times of India for our generation, and perhaps for our parents' generation, and for our kids' generation. The best time will be actually what we will see in the next 10 to 15 years' time. There are two, three reasons. One is for a combination of reasons, we seem to be coming out of COVID much better than many other countries, and for some unexplainable reasons. Science cannot explain actually why we're coming out better than the United States or Australia or France out of COVID and we're just a little better. Maybe it's because of the type of food we eat or the weather we have. So how we come out of COVID could actually make India a chance at succeeding in the future. Second is the influence of tech and how it's changing our everyday lives. With the combination of Jan-Dhan, Aadhaar, and mobile services today, the ordinary man is seeing a lot more tech in their lives, and that's going to influence, I think, the way you live your life, the way you think, the way you invest, the way you live, the way you entertain, and everything else. So tech, how COVID is kind of leapfrogging us outside into a better world when compared to the rest of the people, and also the focus on India versus China. I think ESG is going to have a role to play in the future, and on those parameters, I think India will begin to count a little higher than establishments in China, and we will start attracting a little bit more investment also. So I think our best days are coming up for sure.
Sure. Manish, as the last final comment, in the next 1 to 3 years,
we entrepreneurs are dealers in hope, so you're not going to get other hope.
Everybody is. Let's clarify. Everybody is, not just entrepreneurs.
Yeah, but hope is not a strategy. But hope is not a strategy, and I think that there is a strategy for India this time round. That would be my argument or pushback to people, that there is a strategy of formalization, urbanization, industrialization, financialization, and human capital, which is consistently reinforced in the last few years. I mean, they may look like independent policy interventions, but it's clear that we want to formalize, urbanize, industrialize, financialize, and sort of raise human capital. And I think that is really the most important part of the last few years, is that they are very difficult because, in 1991, there was a lot of low-hanging fruit. Now the reforms are no longer flick of pen reforms. There are trade-offs to be made. There are vested interests. Nobody cuts the tree they're sitting on, as we are seeing with Punjab farmers. I mean, when people say you should convince them, there is no way they should be convinced. If I was them, I would not be convinced about this reform. But we have concluded that 90% of farmers are better off and 10% lose. So my hope is also we are finally doing reform like labor reform, education reform, and agriculture reform, where there are some losers. But we have concluded that the greatest good for the greatest number is what we should focus on.
Sure. On that note, thank you so much, both of you, Manish Sabharwal and Ajit Isaac.